You wake up, open the chart, and the move already happened. Clean breakout, strong momentum, perfect direction. Now you're staring at the screen wondering, do I chase it or did I already miss it? Here's the uncomfortable truth. The market often chose direction hours before you even showed up. Most traders think the move starts when they see it. London Open, New York session, news release. That's when they expect direction. But in today's Forex market, that's usually too late because modern moves are building earlier now, quietly, before the volatility, before the headlines, before retail traders are even watching. And if you don't understand this shift, you'll spend the entire year entering after the move already expanded. First, institutions position before retail traders arrive. This is the biggest thing most traders miss. Large positioning doesn't happen during emotional spikes. It happens before them, during quieter conditions. Lower liquidity, less attention. That's why you'll often see slow, grinding movement overnight, small pushes before session opens, price creeping toward key levels. That's not random activity. That's positioning. By the time volatility arrives, the exposure is already built. Second, the breakout you see is often the final phase. This changes everything about timing. Retail traders love confirmation. Breakout, momentum candle, volume spike. That feels safe. But ask yourself, how far did price already move before the breakout happened? Because many times, the obvious move is actually the exhaustion phase. The market already spent hours building direction quietly. Now it just needs liquidity to complete the move. That liquidity comes from late entries. Third, the market moves when participation is lowest. This is why traders feel constantly late now. The strongest directional pushes often begin late New York, during Asia, before session overlap. Why? Because thinner liquidity allows price to move easier. Less resistance, less opposing flow. So by the time most traders sit down during peak sessions, price has already expanded. That's why London feels choppy, New York feels exhausted, and your entry feels late, because the market already moved before the crowd arrived. Here's what this looks like in real time. You check euros to US dollars before bed. Nothing special. Overnight, price slowly trends higher. No big news, no explosive candles. Then London opens. Suddenly, price breaks resistance aggressively. Momentum explodes. Retail traders enter the breakout. But within the next hour, price stalls, then retraces. Because the real positioning happened overnight. The breakout wasn't the beginning, it was the completion. Here's the dangerous part. The cleaner the setup looks when you open your chart, the more careful you should become. Because obvious movement attracts late participation, and late participation often becomes liquidity for earlier positions to exit. That's why traders keep saying, the market moved right after I woke up. No, the market moved before you arrived. You just noticed it too late. So here's what to take from this. Stop treating session opens and news spikes like the beginning of the move. Start tracking what price did before the crowd showed up. Where did positioning begin? Was momentum already building overnight? Did price already expand before confirmation appeared? Because right now in Forex, the traders catching the best moves aren't reacting faster. They're positioning earlier. If you've been feeling late to every move lately, comment "too late." I want to see how many of you are noticing this shift. Next video, I'll show you how to identify early positioning before the breakout becomes obvious. Subscribe if you want the real side of Forex.